Promised. I said 11 a.m. Eastern time. We'll be live, futures trading with NinjaTrader. And here we are. We're going to spend the next half hour going through the various futures markets with Jim Cagnina from NinjaTrader. We're going to be going through oil, going through wheat, copper, of course, the S&Ps, of course, crypto, Bitcoin. Any questions you have at all about the futures markets, ask them now, and Jim will answer it. So smash that like button. This is Future Trading with NinjaTrader live right now. I've got Jim Cagnina with me. Jim, oh man, what a market! I don't even know how you're sleeping. If you have you been sleeping, because the market is so bipolar right now.
I was up last night. Remember the futures markets open up Sunday at 6 p.m. East Coast time. I was up for a long period of time trying to make heads or tails of what we saw. We opened up gap down in the equities, opened up gap up in the risk off assets. And we could talk about the gaps a little bit later, but when you have that gap down, it's like you're in for a wild ride. And we were in for a wild ride with gaps being filled and then reversing. It was nuts.
Yeah, it's been like if you were at your screen this morning at 6:30, you were probably bracing for impact. If you stepped away and came back at 9:30, you were like, "Whoa, we are ripping!" And then if you stepped away and came back an hour later, you're like, "No, we're back down again." So I don't know how you step away is the point I'm making here.
But, you're right. You need to be on your toes, man, all the time.
Yeah, so let's what chart is this? This is Crude futures. Let's start here. Crude ripping. What else? What else is there to say about it? Honestly.
Yeah, I know. And this is kind of the story. This is the main headline. This is the big thing to consider. This is WTI crude. This is, the US based light sweet crude, which is the most attractive type. And, we had a crazy, crazy run up to 100 and almost $30 last night. And sellers came in and said, no, you guys you're out of hand. You're getting a little bit crazy. So they brought us back down. We're still at $118, as you can see, with this candle right here, which is big, right? And it's a global marketplace. All of these things are interconnected, and it's going to tell the story of inflation. It's going to tell the story of stagflation. It's going to tell the story of everything as we go forward here. And we've also seen, the Chancellor of Germany saying, "Well, wait a sec, we can't boycott Russian oil." So a lot of moving parts here.
Yeah, they kind of need it. So oil. We got to 130.50 this morning, and I know we're off that price now. But Jim, can you walk us through a setup here? Do you see any reason why we shouldn't just keep on going higher? Technically speaking.
Yeah, in my opinion, and I'll tell the story this way. If you remember Omicron on Friday back by Thanksgiving,
yep.
This affected demand. This was a demand candle, in the market broke.
Wait. What do you mean by demand candle?
Well, because the thought here is with Omicron, people are going to travel less, right? People are going to be restricted again. And so that put downward pressure on prices, at least from a fear point of view, right? It drove us all the way back down, and we stayed here for a while. Fast forward to now it's a supply concern, right? And so it's like, hey, what boycotts are going to be in fact, what's going on in production locally, what's going on with Iran and Venezuela. So all of these supply concerns now are driving price up in the opposite direction. And that's where we're at right now. And yeah, I would not be selling this market until I hear the words ceasefire.
Probably a good rule of thumb to have.
Yeah, and if you want to wait for a retracement, that's okay, because we will have this price variation. But right now it's a bull market and climbing.
Now, this is not the only market that is just doing crazy stuff right now. A lot of commodities. You want to go to the other ones right now that are doing some weird things?
Yeah. Let's start with crude, with gold. Again, this is risk off market. This is a value move. Gold prices are almost at 2,000. As a matter of fact, they breached it last night. We went over 2,000 again. A little bit of settling down today, but again, looking for places to buy. As long as this conflict is going on, people are going to be freaked out and they're going to be moving money. So gold futures is one of those risk-off things that we're looking at on an upside. Let's kind of shoot over to some of the other commodities, though, while we're at it. Let's start with copper. Now, copper had an interesting, and this is, again, remember, copper, 50% is used in construction and 30% is used in electronics, right? Everybody has copper associated with their life and the story. And as a result of that, it's very important when you think about inflation and when you think about production and supply chain. So right now we have a pretty big move back up, even though today we had a big red candle here, right? Things are kind of settling down. I don't think we're out of the woods yet on copper. I want to keep my eye on it. And I probably wouldn't be interested in just selling short right now.
Would not be interested.
No. A nice pullback to 23.6%, maybe. Yeah. Then I'd be interested in going long, I think. So right now, it just kind of, maybe it's settling out, maybe it's balancing a little bit. This early in the morning looked like a systematic risk move, but now that equity markets are getting hammered, that's not true anymore. So I'm going to keep my eye on that.
Do you ever, like, these are daily charts that we're bringing up. Do you ever just, like, drill down, like, shorter than that, like, as you look to set up a trade here?
Yeah, so when we toggle to the 10-minute chart, that's exactly what I like to do. Like, look at a short term, try to identify structurally what the candles are telling us, and then look at all the indicators and make a decision for sure. But I drill down to the 10-minute chart.
Got it. All right, what else?
Besides lumber, it's, again, construction, especially here in the U.S. We had a lock limit up here. See that little hashtag there where I'm circling it with my cursor?
Yep.
Just jumped up there, stayed up there. Finally, sellers kind of came back in the next couple of days a little bit, but we're still above my trend line here. I am bullish on lumber still. I don't see any relief in the short term.
Bullish on pullbacks, though, is the key thing, right?
Yeah. As we approach my trend line here, I'd be interested. But I mean, all these little hash marks are lock limit up, lock limit up, lock limit up, lock limit up, lock limit up.
Oh.
So a ton of just, it was all buyers. There's no sellers involved.
So what does that do to a market upon resumption, after the limits and after the market resumes? Now you basically have this giant gap in the chart. As long as we stay above that gap, you're bullish, right?
Well, yeah. I mean, so what happens if you were stuck short here, you couldn't get out until way up here, until there was an opportunity. Right. So let's take a look at 2 days ago, or two sessions ago, I should say, we gapped up right at this particular point, and then we actually did the following session have some trading occur, and we touched the trend line, right? Then buyers brought us back up. So now we're slowly turning the corner here. But again, this lock limit here and this high, these are targets for me. I wouldn't try to go necessarily short right now.
Okay. But you're not long either.
No. But I would kind of wait a little bit and just to see if we can get some settling.
Okay. What else you want?
All right. So let's go to wheat. This is Chicago. Chicago wheat, right? It's all over. Big deal, right? Crude oil is number 1 in my book. Wheat is number 2. Don't forget oats is also limit up. I don't have that chart, but these kind of commodities, right? These are staples. We need them. We need to eat. Lock limit up, lock limit up, lock limit up, lock limit up, lock limit up. When you see a candle when there's lock limit up, that means there was trading at these prices, but we ended up at the top. So there's no end in sight here for wheat. Now, interestingly enough, we're not anywhere near the all-time high for wheat, right? We've had, I don't know, as early as I think 2014, this particular wheat futures product was 1,600 plus. But still, this is not a good trend. And we're talking about inflation right now, or possibly stagflation. This is not helping anybody.
We did just get a piece of news here. Sovicon, which is a leading Moscow agricultural consultancy, lowered their Russian wheat export forecast for the year from from July of last year to June of this year. The forecast for the total wheat exports for that year, they lowered it by 0.8 million tons, down to 33.5 million tons from a prior estimate of 34.3 million. So, lowering the wheat forecast, or wheat export forecast, means lowered supply, rising demand. That's why wheat's going parabolic here. That's why you've got a bunch of like the wheat ETF here in the U.S. is basically broken now because they're not issuing any new shares. So if you wanted to trade wheat, frankly, the best way to do that is by trading, ZW, is trading your wheat futures if you want to trade wheat, which again is difficult.
Yeah, and remember, this is the front month. This is the May contract. There's outlying months also. That's it's in backwardation right now, but you still could trade the curve there. The difference between two.
Explain that concept of backwardation. Big word.
Well, it's just where the prices now are higher than the prices in the future, as opposed to the opposite, which is normal because you have the prices in the future should be higher because you have a carrying cost associated with a lot of the commodities. Here it's the opposite. It's inverted.
Yep. So typically what happens if you were to hold the futures contracts for like a long term, you have like a long-term trade on, and you would just roll them over every month. There is that rollover decay, right? Because the future always costs more than the present. I should say always, usually, right? So you're constantly selling at X and buying at Y, and Y is a little higher than Y. But right now it's inverted, it's backwards, right? Not a normal market, which it happens, right? It's happened to oil previously, and it's happening to wheat now. It just means be prepared for extra volatility, right? Is there any other way you would approach that?
Yeah, I mean, our focus is on day traders right now, and until this kind of normalizes, my advice to folks is, just wait, just stay out for now. For the hedgers and the commercials, obviously they have to do the calculus to figure out how to position their hedge or their portfolio for a long period of time. But for us retail guys, it's like, all right, this is lock limit up again. I don't want to get caught with the short position here because it can go lock limit up tomorrow, and I can't get out. I can't get out. So that's what I'm telling folks.
Yeah. It's not lock limit up now, is it? Or is it?
It is. See that little dash there?
Oh man. Oh.
There was no trade.
So wait, how long are these halts typically? Do you know?
Well, this will be the whole session today. Unless.
All right.
Yeah.
All right. That was fun.
Yeah. So the locks are different in different asset classes.
Yep.
In equities, they kind of mirror the New York Stock Exchange with three different circuit breakers.
Sure.
Here it's different. Here it's totally different.
So does that rule apply for all the commodities?
Pretty much. Yeah. Yeah. There's a number. Yeah. And you can go to the CME Group website and type in, CME Group lock limit.
I stand corrected. You're not. If you're trying to trade wheat today, you're not.
Yeah,
you're not trading wheat today. If you haven't already, you're not trading it.
Yeah. So, I mean, if you're stuck in a position, don't do it.
I mean, I'd rather be stuck in a thing going up than a thing going down. You know what I mean?
Right. It's all buyers now. No one's going to sell.
All buyers, no sellers. Holy moly! Yeah. All right, that's pretty wild. So what else are you watching?
All right, so let's cruise over to my favorite Russian ruble.
Oh yeah.
All right, we just crushed my ellipse. Right, this is going to be worthless. And all the headlines, I'm sure you're familiar with them, Spencer, and everybody is, about the sanctions and the SWIFT transactions and not doing any business in Russian rubles, and this is causing a collapse. Early on, I think folks tried to move over to Bitcoin. Folks tried to change their rubles to U.S. dollars, but at this point, it's almost impossible. So nobody wants to get paid in Russian rubles. I don't.
No, I don't think they do either. Frankly, I don't think people over there want it. So
yeah. And the one note I did take from this morning, it seemed like a legitimate note from Reuters, is, hey, to halt military operations, Russia wants Ukraine to cease military action. change its constitution to make sure that, enshrine neutrality. In other words, they don't join the European Union or NATO or anything like that. Acknowledge Crimea is a Russian territory. Well, it already is. Basically, they took it over. And then recognize the separatist republics as independent. So those are the four. These are big hurdles. I don't know if we're going to get there or not, but that's what's on the table so far, according to Reuters. Sorry.
Again, it's more the same, right? Come to the negotiation, throw down a bunch of crazy things, and then say, "Oh, they were willing to work with us." Well, all right, So, anyway, Ruble continuing to crash here. I don't know what there is to say about it. Although what is interesting is this volatility is spreading to other major global currencies. Basically, the dollar is your safe haven right now.
Let's go to the dollar index. You just help with the transition.
Yeah, that's a remarkable chart right there.
Yeah, so the dollar index, remember, this is a futures contract. It's very popular. And remember, it's associated with, it's the US dollar. It's an index. So there's other currencies. I don't have the list off the top of my head that it is indexed against. And here's clearly, the flight to value or flight to quality as it's perceived in the marketplace, with the US dollar getting stronger across the board is a general average kind of index. And so there we're at. I mean, we're targeting I have 100 target up here. We're getting there.
Wow. Yeah. That's your safe haven, right? I guess in the currency.
Yeah. So we'll see if we get back down to my trend line here. I don't know. It's going to take a lot of love, as Neil Young would say. Let's talk about Bitcoin. I know you're a Bitcoin fan.
I mean, I just don't understand it because, like, on paper, this should be the time. This should be Bitcoin's heyday. We just talked about how a lot of the global currencies are against the dollar are crashing. If you're a Russian citizen and you don't have access to banks or credit cards, I mean, this is a use case, and yet the price of Bitcoin is not really reflecting that, which makes me scratch my head a lot.
Yeah, I know. And this is a brand new thing, right? Bitcoin's like a brand new thing. And literally, where's my pointer at? Sorry about that. I was thinking that this big green candle here 5 sessions ago, 5 sessions ago, was the bypass of RU sanctions candle. And then we had continuation buying coming in the next session, but that was it. I was surprised we didn't keep moving up just like you. And I really was surprised. And then things are kind of trickling back down to normal. I don't know. I don't know if that's going to be a permanent solution. I heard rumors that Russia's doing a gold back cyber coin, which would be a stable coin, and they have the gold to back it. So I don't know what's going on here. I wouldn't be a buyer though right now.
It's just, and I'm, I've never sold Bitcoin in my life. I've only ever bought it. But it does make me question the future of Bitcoin a little bit, because this is what they said it was for. It's for the underbanked or the unbanked. In this case, if you're Russia, you're unbanked, more or less.
Yeah.
And
now keep in mind though, in the futures with this particular contract, the micro Bitcoin futures, or even the regular Bitcoin futures, you could go short with or go long, right? You don't have the pattern day trade rule. You don't have to borrow from a broker. You just have your margin money, you put it up, and you can go long or short. So, when you look at this chart, what I would say was, as we approach my middle tier here, my red middle tier, maybe I want to try to, if we can get a pop up there, maybe I want to get short here. We're still at, that would be a short at 48.60. A lot of downside potential to, buy it back later for a profit. This is just my opinion. There's obviously risk that you're going to get whipsawed, but that's advantage futures, man. That's why I like this markets.
All right. Do we have any active trades on right now, Jim? Anything?
Well, so let's take a look. But one quick thing before we go to the 10-minute charts here. So I drew this orange channel. This is the S&P, right? Okay. I drew this orange channel. And what I did was, when the invasion started, the bottom of my channel touches the lowest body of a candle. the top part of my channel touches the highest body of a candle, and we've closed within that candle every time. Today we finally broke out. Now, if we close below here, I'm going to be really bearish. I'm going to be really bearish here in the equity market, in the S&P 500, and I have a target there. This little wick. These wicks get targeted a lot, Spencer, for some weird reason. I don't know why. 4102. So we'll see what happens today throughout the rest of the day on here. But that's not. This is kind of an overall picture of the S&P.
All right. Any questions about any futures market? Drop them in the chat right now. We have Jim Cagnina on it for a half hour every single Monday, 11 to 11:30 a.m. Eastern time, talking only about futures. That's still the S&P chart, right? I can tell it looks.
Yeah. So So you're asking about a trade idea, and I'm seeing if there's one that's percolating right now. And the tough part about doing a trade right now is somebody internationally says something, and it could cause either extreme market happiness or extreme price dislocation. So make sure you have stop losses here. But as I look at this pattern here today, and again, this is from early morning pre-market, we rallied all the way up. We filled that gap that we talked about overnight, and then sellers came back in, and we finally got some bottom here. We got a little bit of stability here at the bottom, and I'm not even going to draw my rectangle. I'm going to move this one that's in the cloud down here and say, all right, so we have an area here of support, short-term support, right? Our body hasn't closed into this area, into this rectangle below the 23.6% for a long period of time, right? So I would use that is an area of interest to say, hey, if we do get down in here again, this will be a good place to maybe consider an entry, right? And so I'm going to be a little bit more aggressive for now because we have the point of control, which is a volume kind of thing. We don't have too much time to talk about. And then the top of my rectangle. And I would say, hey, let's start buying units in here, right? Let's start trying to establish a long-term position. And then we have the ability to have a really tight stop. So we wouldn't be risking that much. Especially with the micro E-mini S&P.
The stop would be that 37.72 level, or is that
well, that's what we're trading. This is what we're trading right now. So I would try to, this is my trade idea. Again, it could be a bad one, but I'm literally, 42.62 and 3/4, give or take a tick, would be one unit. That wait for the market to come to you.
Yep.
Try to buy a contract there. The second unit, then same thing. Let's wait for the market to come down. 42.53. And then we'd have a 2-unit trade on. So maybe we only get 1 unit, maybe we get 2 units, or maybe we don't get any units. I don't know. But then my stop would be below the rectangle, and that would be a trade idea. So I got to change it to a 2-lot, and we're good. So it's relatively tight given the size of these candles here, but I'm gonna have faith in my area support here. Let's see if it holds up.
Can you look at gold right now?
Yeah.
This was for BNZ and B. Let's look at gold.
Yeah, what happened to my gold? I got corn, I got bonds, I got a gold chart.
Gold in the green. Not by much, but it is in the green.
Gold is up $13 today. I'm bullish gold. I think you have to be with what's going on today. But the trend is down ever since pre-market again. Sellers came in strong. We tried to retrace back up. We got to, we traced above the 61.8% and closed there a couple times, which is usually bullish. In this case, it's not. My rectangle there that I just moved over there is showing an area of resistance there. And so now you got to kind of pick a position. If you want to do a counter trend, you're looking for places to sell right now, right? Because, this has been in a bull market. But counter trend trades could work on a small, day trade basis any given Sunday. So it's looking pretty negative right now. VWAP is kind of negative, but not kind of sideways. Volume weighted average price, that's where my crosshairs is. My CCI is negative, but not a lot, -13. And my moving average cross is going parallel. So from a trade idea point of view, I think you have a couple of options here. Same thing, try to maybe sell the 38.2%. We're going to go with the daily trend instead of the overall long-term trend. Another unit at 50%, and then a stop above my rectangle. This would be my trade idea right this second for this.
All right, not bad. We got something here. What about this? We've never talked about real estate futures or REIT futures on this show before. Do you know what the ticker is for that, Jim?
No, it's not really a real estate. it's not really a retail market. So I would say if you could trade interest rates, right? Treasury bonds, 10-year notes, 5-year
Yeah.
notes, 3-year notes, and those kind of things.
Okay.
I think those are more oriented toward us day traders. We did get a fill, by the way. We're short right now.
Oh, look at that.
Yeah. So let me just kind of make this a little bit easier for everybody to see on the stream. And trying to get a second unit here, stop way up here. We got filled at 1980, and we're about a little over a buck into the trade. So the other thing I want to do is I want to put a target in just for now, for sure, get a profit target in here, and just kind of watch how this trade percolates. Sorry, I think I cut you off.
No, all good. Francis says he wants to start trading and is willing to learn. Jim, give a plug here, Francis, since he wants to start here. Where do you recommend Francis go?
Well, Francis, and anybody, literally, we do a morning trade setup presentation here at 9. It starts at 9:10 East Coast time every day, Monday through Friday, and then we do an afternoon at the close 3:15 p.m. East Coast time. Look for trade ideas in the afternoon, trade ideas in the morning, and we kind of explore technical analysis in detail. And we talk about what would be a good trade idea, what would be a bad trade idea. It's free. It's on the events page, ninjatrader.com/events, and you're welcome to come to that. I think it would be a good place to start. Everything is on the table, and we have brand new people in the room. And then it's a YouTube thing. And then we have experienced people in there as well who also help out. So it's a good place to be, and it's free.
I should add that there are a bunch of links, including the link that Jim just mentioned, in the description of this video. There's the events. There's ninjatrader.com/platform training/futures/get started. A whole bunch of links there. So resources galore on and when it comes to futures, like that's what NinjaTrader is known for. Different brokers specialize in different things. NinjaTrader specializes in futures. That's the market that it was built to trade for. So there are different markets with different intricacies and different things. So there's a reason that they've won the Benzinga FinTech Award for Best Futures Platform, is because that's what they do, right? If you're looking to trade stocks or crypto, that's cool. If you're looking to trade futures, NinjaTrader is really among the best for that, if not the best for that. So, Jim, any final thoughts for us as we wrap it up here? We're right across the board in the major indexes.
Yeah.
Oil is bounced in the last few minutes.
Yeah.
Now we're back to 120. I'm not seeing a whole lot of action out there right now.
Yeah. If you could show my screen really quick, Spencer.
Oh yeah, we didn't get to the tip of the week. Shoot,
that's okay. We're going to jump into it now. You open the door for me. I know. I was so excited. We're so excited to talk. There's so much to talk about.
Yep.
All right. So the first tip is, remember, Thursday is CPI, right? Consumer Price Index. The inflation number is coming out. The consensus is 0.7 month over month, 7.9 year over year. And this is a crosswind that's smacking us in the face right now with the whole inflation scenario, when what the Fed is going to do is going to impact the markets in addition to this conflict. So this is important. Could be a big deal if we miss the target by any substantial amount. This is the numbers we're targeting. We'll see how it goes. And then my second tip is, I crossed it out in red. It can't go down any further. Wipe that out of your head. It could go down further. It could go up. It can go down. It can go sideways. You don't know when the trend is going to end. Unfortunately, if you did, if you tell me, because then me and you we could make some money. So just be careful with that. It could go lower.
Just want to add that CPI print will be out at 8:30 a.m. Eastern time on Thursday. That is your most important economic data point right now, especially when you consider what next week is, Jim. Next week is the next Federal Reserve meeting. We know they're probably going to raise rates a quarter point. Powell basically said so. So it's not really a question of will they or won't they. It's a question of what do they say about future rate hikes? How high do they think we're going to go? That's what we'll find out next week. And the CPI print for this Thursday is basically your last big economic number before that meeting next week. So, very important number on Thursday. Very important number.
You nailed it, Spencer. Absolutely.
And on that note, we have come to the end of our half hour. So, this has been Futures Trading with NinjaTrader. We're going to end the show right now. Go over to Benzinga Live right here on this channel. Jim Cagnina, Senior Education and Training Specialist for the NinjaTrader platform. Jim, always a pleasure. We'll have you back on again next week, specifically to probably look ahead to that FOMC meeting, right? That'll kind of be the narrative of next week. And a lot will happen between now and then. I hope the markets like wheat calm down, oil calm down, and it's been a crazy time for futures, that's for sure. We can't say it hasn't.
Absolutely. And thanks for having me, Spencer. I'm looking forward to next Monday.
All right, Jim. Have a good one. Guys, I'm going to hop, smash that like button, and stay tuned for our next show, Benzinga Live. Going live right now.